Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields holding the range. We'll call it the 100-day range right now, between 2.80 and 3%. Yeah, we had those two sessions where we modestly nudged above 3%, but it didn't hold. And I think ultimately that range is going to continue to hold as we are trading right near the midpoint, actually slightly biased to the upside, but right now holding right near 294, 295 is where the 10-year yield trades after recently trading down to 280, before that recently touching 3%. And you kind of get the picture here. The market seems to be in a very much stuck in a range. Nothing we're hearing out of trade wars, nothing we're seeing out of currency crisis, nothing we're seeing out of credit issues, nothing we're seeing out of equity rallies or potential Fed rate hikes. None of that is having any effect on the bond market, which has held this range for so long. So right now the bond market really kind of waiting for something to happen, or at least defense against something happening. And I think that ultimately we're going to see a breakout move. It's going to come from either one of two places. It's going to come from a crisis overseas, which is going to drive yields lower, or it's going to come from some kind of Fed policy, which maybe shifts their unloading of long end bonds off their balance sheet. So that could, and that would adversely affect yields higher. So right now, we're still right in the middle of that range. And if you look at market volatility, we saw market volatility go out with a bid on Friday, not only here in treasuries, but we also saw it in equities. It looked like a pre-weekend weather bid. As the hurricane was coming up the East Coast, there were some questions about what kind of damage or what kind of cost it was going to bear with it. We did not see any of that fulfill any sort of negative expectations. So right now, volatility lower in treasury space, also lower in equities as well. And ultimately not really giving us any picture as we continue to trade the range. And lastly, let's look at, we have some auctions coming up, 3, 10, and 30-year auctions this week. Last month's auctions were, we'll call them mediocre auctions, and the yields are really quite the same as we saw about a month ago. Ultimately, what we saw last month was a decline in demand, and if that continues, that will also help aid in yields nudging higher. But right now, I think we're going to see continued interest from foreign buyers who are fearful of their currencies or their credit issues in their countries, looking to buy and maybe gets a flight to quality bid on these auctions. But recall last month we did see mediocre auctions with lack of demand. So right now, 10-year note yield holding the range. We do have some auctions this week. This is Todd Colvin coming to you from the floor of the CME Group.